All right, let's see. Figure out where this video is. What is the URL? I am live. It is unlisted. Live control room. No, I don't want that. Go to there we go. Shareable link. There we go. Got it. All right. Let me know when you get in, guys. Let me know when you get in. All right, Andrew, what's up? You're the only one so far? There we go. All right, Mike, what's up, man? It is a dangerous market. It is. You guys have to, guys, if you're going to make money, you have to stop your losses carefully. So I want to show you, I want to help you guys understand what's going on. Hey, Dave. All right, there's 5 of you in here. This is a private stream. This is not a public stream, okay? So only you guys in the trading group have access to that link that I just shared, okay? What we want to talk about is setting your stop losses. More than that, it's proper entry, guys. It is proper entry. What's up, Sherlock? Who are you? Who are you in our group? I don't know that screen name. Sherlock Holmesy. You accidentally posted it on YouTube. What? That's fine. This is gonna be recorded, guys. It'll be available for you. It'll be available for you. All right. I mean, it's okay. I mean, the other people see it. It's not secret. I just want to let you know this is exclusive. You should feel this is an exclusive thing for y'all. So, oh, gotcha. All right. So let's talk about entry, guys. First off, when you have a trade, guys, I always give you guys my rationale. Okay. My rationale is okay. What is my thinking? Why do I want to take this trade? Do I have enough reasons? Eamon was talking about we compile data and we say, okay, do we have enough reasons for this for this trade, right? And his video was quite good, talking about letting it stop out. He was okay with that because of the risk to reward. Okay, so my idea was to the downside, obviously, and that's Why is that a good trend? Well, number one, this was a very good trend down. It was looking relatively impulsive, so that was good. This was looking like a fourth wave, so everything was looking okay for this trade. Okay, now, but the idea here. Let's just go back to what we had here. Here's the idea of the trade. Y'all have to realize this, guys, and this is what we use Elliott Wave to do. The idea of the trade was that this right here was our fourth wave, okay, and that this right here was the beginning of the next wave. Let me just show you, okay. See how right here we had a three wave up, and then we had a pull down, okay. Then we had the next wave to the upside, and then we kept on going, okay. Well, the idea was the same. The idea here was that we have a three wave up, okay, and then we got a one wave. We were going to get a three wave, two wave, okay. This was our down, three wave, two, same pattern there, okay, and then we we're going to continue on down. That was the idea of this trade. Now, when does here's the question: when does the criteria for this trade end? Okay, you guys were saying 81.16. No, that was yesterday's information right here. See, when this was going up, I said, listen, if this breaks 81.16 or so, which is right here at this top, this is going to continue to the upside, but it didn't. It came back down, so it still gave us some belief system that this trade was still valid, right? So this came down, and guys, I look at this and I look at it as an impulsive wave. When I count this, it counts impulsively. So the fact that it went up surprised me pretty well, and it probably surprised you guys too. But here's what you need to be thinking: it's fine when we don't know that this is going to happen. It's fine to say, okay, it might do this and then that. That is a reasonable Elliott wave move. 1, 2, 3, 4, 5. Okay, that is very reasonable trade. So here's what you do. You need to wait for three waves first, okay? And that's what a lot of you didn't do. You got in right here on this candle right here. That was not three waves. We need three waves that's proportional to that wave, okay? And you guys may not have been patient enough. And so some of you are getting in at 8,000. No way. That was not a good entry. What you need to do is throw the fib retracement on this whole move, okay, on this whole move, right, and look for the 618 and then a lot of times the two wave will come up to the 786 pretty deep. If you look up here, look at this one wave and then the two wave. Look at the retrace of it. Let me just show you. Came up to the 786 pretty hard. Now the first push up here came up to the 550 and the 618. Okay, you could have gotten in here, but once price came back on you, it probably should have, you could have cut your stop there. Of course, when that went like that. But anyway, I guess my point is that this little candle was too early. This little candle was too early to get in. Most likely, that was not a good, well-developed three waves. That it wasn't finished. So anyway, we would have waited for. We would have wanted to see. I mean, here's a well-developed three waves, guys. Let me just show you. That's a well-developed three waves. Well-developed three waves. Well-developed three waves. That's what a three wave looks like. Okay, it's got to be proportional to the size of the wave. Okay, this is real, and this is well developed on the 1 hour, guys. This is real dumpy and small comparatively. So that's something you're looking at. You're looking at wave structure, wave shape. Okay. Second thing you're looking at, as soon as you got this third wave, as soon as it's coming up here, guys, the trade idea got invalidated once we broke the high because of Elliott wave rules. Remember, the two wave cannot surpass the one wave. And so the idea behind this trade was that this was a one wave, okay? We wait for a three wave pullback, so the two wave finishes. We get in here, and our stop is just above the top of the wave, and that makes, so what that does for you guys is that makes your entry right here and your stop so close. I mean, really, This is the way we need to think about entry. A lot of you guys are just entering kind of willy-nilly, and some of y'all are thinking, well, maybe we need to go long right here. No way, no way. Let's just look at every other green candle on this screen. I mean, there aren't a whole lot of green candles, number one, but let's just look at them. Okay, here's some green right here. Here was some green, but what happened? You got that. If you're going to enter, you wait for that. We had some green. What happened? It came down here. If you want to enter, this is where we enter on this three-wave pullback. It went up. Boom. Okay, that's what happens on green candles, guys. Look here, green candles. It comes back. It comes back. We don't know we don't know how far this candle's going to go, right? We don't know. We're only looking at it right now. We can make some guesses based upon the fibs, right? But we don't know where it's going. So we put the fibs on it and we watch it. Okay, we haven't even reached the 1618. It is still a possibility, guys, that this wave is just a three wave, and that's all we're getting. And then we're going to get a three wave down, and then we're going to get another three wave up. I mean that's a possibility, and that's just part of a smaller, some other kind of weird corrective move. I mean, it could do this. We could get that again, right, and get up to $9,000. I mean, we could definitely get that. I don't know what we're going to get, but I guess the point is we never know. But we need to trade wisely. So, number one, before you enter a trade, here's a couple rules that you guys need to implement for yourselves. Okay, number one, you need to always have a trade criteria or a trade rationale. You'll notice that I always give you guys trade rationales. I usually, with a trade setting up, I try to give you a video that explains the trade, and I give a chart that shows the entry and the exit. Now, the reason I didn't do a whole lot of that here is because this is still, to be honest with you, part of the same trade that we were in before. I was still looking for 7,500. I am eventually still looking for 7,500. I think we're going to go lower, but whether we have kind of surpassed this. So we're not going to hit $7,500 soon. Okay, I don't think we're going down from here. I don't think. There's an outside chance we could, but it's not looking like it. It's looking like we're going up to 9 first and then down, right? There's potential. So I guess what I'm saying, though, is we don't enter long on these green candles. If we're going to enter the trade and ride this up to $9,000, if that's the trade idea, then what are we waiting for? Well, we got to find out, are we going to get a 3? See, okay. Sorry, let me talk about some things. There are different ways to get up here, right? Let's talk about the different ways we can get up here. We can get up here in a 5-wave structure like this. 3 waves back and then 5 waves to the upside. So that's a zigzag. We could get up to 9,000 like that. How else could we go? Well, we got 3 waves here. That could be finished. We could get a 3-wave here and then a 3-wave here, and that's a big part of a WXY. And then we get another 3-wave down, and then we get another WXY up. So we could get this big structure like that, right? That's another way we could get up there. You guys need to have to also understand that, okay, how is price going to go up there? Because that's going to determine the way we trade it, okay? So that's where the fibs kind of help us out, right? So anyway, we don't know how price is going to go. So this is why we're not entering right here on this green candles, because you don't know if this is what we're going to get next. This could be finished. It might not be, but it could. I mean, look at the relationship between this wave and this wave over here. I mean, it's about finished, and you see the red candle that we're getting. You'll notice that it did not make it. It did not make it to the 1618. So it's telling me that, this could be a rejection, and we could be coming down from there. This could be a fake wick outside of this trend area. There's all kinds of things this could be. So with that being said, you always enter a trade with an idea. This is what, it could be 10 things, but this is what you're trading. And so yesterday, our trade was that this was a 1 and this is a 2. That was the trade idea. Looking for 3 waves to the upside. So number one, you always have to have a trade idea. You always need to know where you are in the count, and just because price is going up doesn't mean we go long, okay? It just doesn't mean that. and you guys are going to get killed that way when you do that. All right. So secondly, you need to know where your stop is. Where's the stop? The stop here is wherever the trade idea becomes invalidated. Okay, that's rule number 2. Wherever the trade idea becomes invalidated. So if this is a 1 wave right here, and this is a 2 wave, we expect that, right? And that's what we trade. We're going to enter long. Well, where does it become invalidated? Right here at this high, right here. So we place our stop just on the other side of that high, 8106, 8110, in that ballpark. 8110 ought to, so 8116 wasn't a bad stop, okay? But that should have been the stop for the trade. Some of you, I think, just entered too early. So let me talk about entry and how close as far as good probability setups are. Now, I would never have entered this trade right here at $8,000. You know why I wouldn't have done that? Because my stop is too far away. I don't like how far away my stop is. Because if I'm trading leverage, that's 116. How far is that? That's $116 away. My stop is 100. So if I'm trading 2 Bitcoin or 3 Bitcoin, that's $300 or $400, right? So I don't. To me, that's too much. I don't want to risk that much money, that much capital. I don't have that much capital to risk. So here's something you need to think about on risk to reward. If you see a trade setup that I offer, and you're thinking, oh, I better enter now, but you know where the stop is that invalidates the trade, it's way up here, you need to say to yourself, you know what, that's too risky for me. That stop is too far away for me. I'm going to sit this one out. And what you would have found is that the price would have come back, and you might have tried the trade right here when price was bouncing a little bit. You might have tried the trade, and then you had a good risk reward because then the stop's really close. It's worth a shot. Price could be reversing. Price reverses like that all the time, right? So price could be reversing. So what some things y'all need to think about. When you're going to enter a trade, you need to ask yourself, how far away is that stop? And if you're not comfortable with losing that much money, so you need to decide before you enter a trade, guys, how much money are you going to lose if this trade gets stopped out? You need to calculate it before you enter. And then you need to ask yourself the question, am I okay losing that much money? If you're not okay losing that much money, do not enter that trade. Does everybody hear that? Let me know if you heard that in the chat, please. That's critical. So when you enter a trade, let me just say it again. You need to calculate where the stop is first. And you don't just put a stop willy-nilly. You have to know where the stop is invalidated or where the trade is invalidated, right? Today, the trade was invalidated at the high right here. So once the trade was invalidated here, you would have been able to calculate, well, that's $116, $126, okay? And then however much leverage you have, if you're trading 2 or 3 Bitcoin, you just multiply your number of Bitcoin that you're trading times that stop, and then you have to decide, am I okay losing $300 in this trade? Hi. Give me 5 minutes. So anyway, you have to decide, am I okay losing $500 there? So if you're not okay with that, then that's not a good entry place for you. And you just have to say, you know what, if the trade goes on, the trade goes on, but that's too risky for me. Now, how would you have felt if you had entered right here, okay, at 80.63 and the stop was at 81.05? Okay, now you're only talking $60 or $50. Okay, so then you say, okay, well, I can deal with that. I can deal with a $50 loss in order to win $1,000 or whatever your risk to reward was. Okay, I got 3 people understanding that. So please make this a rule for yourself in the future. When you're going to enter the trade, number 1, you need to know the trade rationale. Number 2, you have to know where that trade rationale gets invalidated. And if you don't know those 2 things, do not enter a trade. If you don't know those 2 things, you should not be entering a trade. Thirdly, you have to calculate, okay, wherever your entry is going to be, wherever you want to enter, you need to calculate where your stop is and how much you stand to lose. And ask yourself the question, are you okay losing that? Set your stop. If you are, set your stop and go about your business. Don't watch the chart. Go live your life. Let the stop do its thing. Come back in an hour or 2 and see if you made money or not. Does it make sense? This is going to free you up, guys. This is going to keep your losses very small, because when we keep our losses small, our wins are going to be big. You're going to lose, Remember, Eamon gave a really good example the other day, and it's really good here. Let's just talk about 10 trades, and let's just say you lose 8 trades, 8 trades, and you only win 2 of them. All right, but in the 8 trades that you lose $100. But the 2 trades that you win $1,000. Okay, so you've made $2,000 and lost $800. $800. You've kept your, and that's at only winning 2. That's a very, very bad win ratio, isn't it? You can have a very bad win ratio as long as you keep your losses small comparatively to your wins, and that's the way you guys need to be thinking. Okay. All right, let's review one more time just to drill it into you. Number one, you need to know the trade rationale. If you don't know the trade rationale, don't enter the trade. Okay? Number two, you need to know where on the chart that trade rationale becomes invalidated. When that becomes invalidated, that's your stop loss. That's where you stop the trade. You don't go any further. The trade rationale, you don't let, oh, well, maybe it'll come back. Maybe it'll continue. Maybe it, once that trade rationale is taken out, then that trade is no longer valid. Okay, and so when you enter the trade, you have to ask yourself, are you okay with where the stop is comparative to your entry? If you think that's too much to lose, okay, then you're gambling. Okay, you're not trading, you're gambling. You're hoping that it doesn't go up there. You're entering the trade thinking, maybe it'll go my way, maybe not. So no, that's not what we do. That's not what we do at all. We enter a trade ready and waiting for. We know what the risk is. Okay, some of you guys are entering and exiting trades in bad locations, and sometimes you get lucky, and most of the time you don't. And your stops are getting taken out because you're not putting your stops in the right place. Okay, I've got a lot more to say about this, but let's just talk about a trade setup here that you need to understand. So in an ABC correction, for instance, okay, once you get this 5A, this 3-wave pullback, this is where we enter to go long, right? That's where we enter the trade. Where's your stop? Right here, underneath this low. Okay, so that's an example of an play in the C wave. Okay, if price? So if you enter into the trade right here and price continues down beyond this, you cut the trade here. Okay, then you keep your stop short. You've got to do that, otherwise you guys are going to get killed. Okay, I know it. I've been killed. All right. Any questions? Any thoughts there? So what I'll do for you is I'll provide trade setups when I see them, but again I'll also provide when that rationale is invalidated. Okay, and when it's invalidated, you got to cut the trade. You got to cut it and be okay with that. So if you've entered in a location where you're like, man, this is just too much loss, that's what's keeping you in the trade too long. Okay, you got to cut that trade. All right. Is that helpful? Well, I hope it was helpful. Yep. All right. Excellent. Well, I mean, will we fall now? Let's see here. So we didn't come up to the 1618. We're getting some rejection. So, do I see 5 waves in here? Maybe. The C wave would have to have 5 waves, and that's complete. One, two, three, four, 5. I mean, it could be finished. It might be in the 4th wave. You have to wait and see if you get any more pullbacks. So wait for this candle close. This is the 1-hour candle. So wait for a 1-hour candle close. Do we get rejection or what? So right here, for instance, if you were thinking that this is going to be an ABC and you wanted to trade it to the downside, here's a perfect example. So the trade rationale here, I mean, it's a not bad entry right now. Okay, here's the way you think about it. You got an ABC, and you're assuming it's finished. Why? Because it's at the 1276 fib level there. Okay, and it did not surpass it, and we're getting a rejection candle. That doesn't mean it's definitely rejected, but you might want to wait and watch price action for a little while and see if this rejection, or if it's just going to be something like this, or we get some follow through with that rejection. But what you can do is you can enter. You can enter right here at the 1276. Okay, you can enter right now short, right? And then where's your stop? Your stop is here at the 1618. If price continues on past the 1618, you know it's impulsive and it's not corrective, and so you shouldn't expect any more downside. You should expect more upside if it passes the 1618. That's the general principle. That doesn't mean you won't get a retrace. I got a stupid duck on my computer. It just means that. So yeah, I mean, if you wanted a trade idea right now, I mean, there's a trade idea for you. You go short right here. If it continues on up here, you cut the trade. So right now, if you entered right where price is, that's 82.35. Your stop is at 83.51. You got to ask yourself, whoa, that's $125. The stop's too far away for me. Then don't enter there. Then don't enter. Okay? Now, here's another way to think about it. You say, okay, there's 5 waves. What if you get 5 waves to the downside? What do you expect next? 3 waves to the upside. You wait for it to start coming up. Then you enter short on the second wave. Okay? Where's your stop? Well, the trade rationale then becomes the top of this wave, because this is a 1-2. That's what you're assuming. So you enter here, okay? And then the stop becomes the top of the wave, because this is where that trade idea becomes invalidated. Okay, so whatever the trade idea is, like right now, we're at the 1276, that this is corrective and going down. That's the trade idea. That becomes invalidated if price turns around and comes up here. So you cut the trade here. If price ends up coming down and you didn't enter the trade here and you get 5 waves down, well, then you get 3. We wait for those 3 waves up, and the trade idea is that this is a 1 and a 2, or an A and a B, something like that, and you're expecting a C. So you enter here and you stop that thing out if price comes past beyond this level, and that's the trade idea. So you have to understand the trade idea for every trade, and understand how to trade these Elliott waves. We're going to be talking more about that on Thursday as well in a class. But I've lost my phone. My phone died, and so let me just check the chat real quick. All right, guys. This video will be available for you guys to watch. So it'll be on YouTube, unlisted. All right. You guys have a good one. I'll be around. I've got someone to chat with for a little while, but I might check on you a little later tonight. All right. Talk to y'all later.